Welcome to a special video from Atlantic Capital Markets, where we'll take a look at the mining sector and give you a detailed overview of this sector, as well as a rundown of the top 4 companies, the so-called mining giants, who dominate the sector. Now, as always, we must state that this video does not constitute investment advice, and we do suggest that you do your own research to ensure suitability for your own personal investment objectives. So, the mining sector has attracted both investors and traders for years, largely due to the accelerated moves and strong dividends. However, with all stocks or sectors that present good upside potential, this does come with an equal amount of risk, and the mining sector is of course no exception. They are instrumental to global growth. To put it bluntly, they dig, process and sell a variety of metals, minerals and energy products that are essential to growth on a global scale. And inversely, global growth trends are also essential to fuel moves in this sector. This makes it possibly one of the most important sectors, not only for investors, but also as a global proxy on growth. In 2020, the mining industry's leading 40 companies had a total revenue of approximately $656 billion. The fact that they can offer very appealing dividends and capital growth makes the sector attractive to both the income and growth investors. So in this report, we give an overview of the sector, highlight the main UK players, as well as concerns coming into the sector. So the commodities mined generally fall into the following sectors. There are the base metals, and these are commonly available and inexpensive metals, mainly used for industrial applications. Commodities in this sector include things like iron ore, nickel, lead, zinc, copper, aluminium, molybdenum and cobalt. Then we have the precious metals, and these are the rarer naturally occurring metals that have, of course, a higher value. The main precious metals here include gold, silver, platinum and palladium. Then we have the energy materials. Now, several materials are mined out of the earth and burned to create energy, the most common, of course, being coal. However, uranium, used for nuclear power, and bitumen, a tar-like substance that's refined into crude oil, also do fall into this category. And then we have minerals, and these are solid compounds found in their pure form in nature. Mined minerals include things like potash, talc, gypsum, calcite, quartz, diamonds and salt. And then we have construction materials, and these are common construction aggregate materials which include things like limestone, trap rock, sand and granite. So now that you have an understanding of the sector, let's take a look at the top 4 companies that now dominate these markets. Rio Tinto is an Anglo-Australian multinational and one of the world's largest metals and mining corporations. The company was founded in 1873 when a multinational consortium of investors purchased a mine complex on the Rio Tinto in Huelva, Spain from the Spanish government. Since then, the company has developed and grown through mergers and acquisitions. Rio's focus is mineral extraction. However, operations do expand into the refining of certain minerals, particularly bauxite and iron ore. The company has operations on 6 continents, but is mainly concentrated in Australia and Canada. Rio Tinto is a dual-listed company, traded on both the London Stock Exchange and the Australian Securities Exchange. Additionally, American depository shares of Rio Tinto's British branch are traded on the New York Stock Exchange, giving it listings on a total of 3 major stock exchanges. Rio's main commodities are aluminium, copper, diamonds, gold, iron ore and uranium, as well as industrial minerals borates, titanium dioxide and salt. Overall, there's 47,000 people who work in around 35 countries across 6 continents, including Australia and North America, and they have significant businesses in Asia, Europe, Africa and South America. Anglo American plc is a British multinational mining company based in Johannesburg, South Africa and London. The group was founded by Sir Ernest Oppenheimer in 1917 as the Anglo American Corporation in Johannesburg, South Africa, with financial backing from the American bank JP Morgan, and £1 million raised from UK and US sources to start the initial gold mining company. Originally the AAC, they then became the majority stakeholder in the De Beers Company in 1926. Anglo American has a primary listing on the London Stock Exchange and is a constituent of the FTSE 100 index. The company has a secondary listing on the Johannesburg Stock Exchange. A further deal was then done in November 2011 with the Oppenheimer family to divest the remaining Oppenheimer share of De Beers, an additional 40% stake, for $5.1 billion. Anglo American is the world's largest producer of platinum, with around 40% of the world output, as well as being a major producer of diamonds, copper, nickel, iron ore and metallurgical and thermal coal. The company has operations in Africa, Asia, Australasia, Europe, North America and South America. The company focuses on natural resources, with 6 core businesses: Kumba Iron Ore Brazil, coal, thermal and metallurgical, base metals, copper, nickel, niobium phosphates, platinum and diamonds through De Beers, in which it owns an 85% share. BHP Group, or BHP as it's now known, was founded in 1885 in the small mining town of Broken Hill in New South Wales. By 2017, BHP ranked as the world's largest mining company based on market capitalisation and as Melbourne's 3rd largest company by revenue, which almost tripled between 2004 and 2012. BHP in its current form emerged in 2001 through the merger of Australian Broken Hill Proprietary Company Limited, BHP, and the Anglo-Dutch Billiton plc. This led to the formation of BHP Billiton. The Australia-registered arm of the business has a primary listing on the Australian Securities Exchange and is one of the largest companies in Australia by market capitalisation. The English-registered plc arm has a primary listing on the London Stock Exchange. In 2015, some BHP Billiton assets were then demerged and rebranded as South 32, while a scaled-down BHP Billiton became BHP, and in 2018, BHP Billiton Limited and BHP Billiton plc became BHP Group Limited and BHP Group plc respectively. BHP has mining operations in Australia, North America and South America, and petroleum operations in the US, Australia, Trinidad and Tobago, the UK and Algeria. The company has 4 primary operational units, with a developmental potash project underway as well. The main commodities include coal, copper, iron ore and petroleum. The firm has over 72,000 employees and contractors globally, with primary operations in Australia and the Americas. Global headquarters are in Melbourne, Australia. Glencore plc is an Anglo-Swiss multinational commodity trading and mining company with headquarters in Bar, Switzerland, its oil and gas head office in London and its registered office in St Helier, Jersey. The current company was created through a merger of Glencore with Xstrata on the 2nd of May 2013. As Glencore International, the company was already one of the world's largest integrated producers and marketers of commodities. It was the largest company in Switzerland as well as the world's largest commodities trading company. The company was formed in 1994 by a management buyout of Mark Rich & Co. AG. Glencore had several production facilities all around the world and supplied metals, minerals, crude oil, oil products, coal, natural gas and agricultural products to international customers in the automotive, power generation, steel production and food processing industries. Glencore have a wide range of commodities. It not only mines but trades and sells. Glencore are involved in copper, cobalt, zinc, nickel and ferroalloys, and also market aluminium or alumina and iron ore from third parties. They're also a major producer and marketer of coal, with mines in Australia, Africa and South America. Glencore are also one of the world's leading marketers of physical commodities, physically sourcing commodities and products from their global supplier base. This means transporting commodities by sea, rail and truck, storing them, processing them and delivering them to the time, quality and specification that their customers need. Through these marketing activities, they offer a slightly different offering compared to the other miners, who mainly focus on commodity production. Glencore Recycling is a market leader in the recycling of copper and precious metals, with over 70 years' experience in the recycling industry. Like any sector, the mining sector is vulnerable to a selection of influential macro factors. So let's take a look at some of the key ones. Firstly, underlying commodity prices. Whilst the dividends and growth are very appealing, it's also a sector that can be more vulnerable to several key catalysts relating to underlying commodity prices and changes on a global growth scale as well. Any slowdown in global growth, or indeed growth in China, can have a serious impact on the underlying commodities, especially base metals used for construction, and these can be things such as iron ore, copper and aluminium. And this in turn has a knock-on effect on share prices. The reality is that the underlying commodity prices will have an impact on share prices, and this can of course be both a gift and a curse. Secondly is, of course, supply and demand, and this is especially so in China. Commodity prices are driven purely by supply and demand, and it's needless to say that an oversupply in a certain commodity will undermine prices and then hit share prices as a natural result. And this is the most obvious day-to-day risk on the share price. Recently, the fears of a potential default by Evergrande in China fueled concerns over the Chinese broader economy and potential declines in construction and demand for raw materials, which hit the commodity prices. And then, of course, the miners' share price. China currently consumes more than half the world's copper and steel supplies, and it accounts for well over half the world's primary aluminium production, much of that based on coal-fired energy. The Evergrande situation has raising concerns about a bigger economic crisis in China that could put downward pressure on a lot of the commodities that China consumes. If Evergrande were to completely collapse, the supply and demand equation in the metals market could be whiplashed into a strong imbalance that favours the bears, never mind the potential for additional defaults, so said Adam Koos, president at Libertas Wealth Management Group. Thirdly, we have environmental impacts. Now, one of the more recent dramatic impacts is the ongoing and almost inevitable decline in the use of coal as the global drive for cleaner energy takes hold and utilities switch over to cleaner energy sources, where pressure mounts on the sector to combat climate change. The coal industry would in fact be one of the main issues for the sector at the moment, and as such, we have seen some of the big players reduce exposure. Rio Tinto sold its remaining coal assets in 2018. BHP Group have also stated that exiting coal would be in its best long-term interest. Climate change and environmental impact is also a big issue facing them right now, and the sector has a poor record in this area. Most mines, as part of the process, use something called a tailing pond, which holds a mixture of water and waste materials from the mining process. This has a major impact on local environments, and with a few very high-profile dam breaches recently, has also seen heavy resistance from locals regarding any new mines. According to a 2020 report by consulting company McKinsey, the mining sector is responsible for 4 to 7% of global greenhouse gas emissions in terms of direct emissions and those from its use of energy. So last up, we have government regulation. Now, the regulation in the sector from local governments can weigh on production and profitability. Regulatory changes come around from a desire that the country in which a mine may be based wants to protect the local environment, government, and indeed the local population. Governments can also be concerned if they feel the country is becoming overly reliant on the exports of a single commodity. We saw an example of this in 2018 as Zambia became over-reliant on copper exports, which accounted for over 60% of export earnings. This, in turn, left the country suffering from a lack of reinvestment as it was being stripped of its natural resources, and profits going into the mining companies' coffers. This has then led to new laws and reforms, with governments introducing higher royalties and taxes. These can be set up without any discussion with the firms. The mining sector is not without its risk, and as such, rewards need to be more to ensure a valid risk-reward ratio for investors. When trading any mining stock, fair reference needs to be taken from the underlying commodity prices. There's no point buying a silver miner if, of course, the price for silver is in a downtrend. Now, this isn't so much of an issue if trading in the heavyweights highlighted in our report, as they're all well diversified and do mine a range of commodities. It becomes more of a concern if you're trading a stock that's just simply mining a single commodity, such as Barrick Gold for gold or Antofagasta for copper, for example. Be mindful of any sector-specific announcements, such as GDP data, most notably from China being a core consumer of commodities. It's also a sector full of startups and junior miners, and these are by far the riskiest part of the sector, as their fate can be summed up based on the next drilling report, either good or bad. So take extra care when looking at stocks. If you have the appetite, then it can certainly be lucrative, but a strong risk appetite is required. When it comes to the AIM market miners, then a mini portfolio approach should be taken, with a range of holdings so the outcome on the portfolio is not all resting on one single stock. Diversification is, of course, key. So there you have it, our review of the mining sector, and we hope it's been useful for you. Please don't forget to check out our other regular market reviews at the beginning and end of each week, and of course our regular special reports like this one. So until next time.